All right, everyone. We're going to talk about the intraday gaps. And so we use gaps, intraday gaps, one initially for not trading through because we know that the market wants to be defended at those levels. And so we like to trade off of those gaps as well. But many times the market would be a counter trend move coming off those gaps or a short-term counter trend move coming off those gaps. So not always the most ideal situation, but when we have like Friday, we had, and this is what I'm going to use for an example, we had coming into Friday, we have sell gaps. So we have with the big run down from the previous day, we have these sell gaps, which these are these square areas here, and we have there's ones up above, there's ones here. We have some buy gaps, which is the green areas down here that were coming in on Thursday. So going up through these sell gaps is risky, meaning your probability of the trade not bouncing off of them is increased. So that means if you're trying to buy to go through them, that you could likely lose the trade, or the probability on the trade going to your profit is going to be less. So what we do and how we take care of this, or we look at it, is that once we have a buy gap, new buy gap pushing through the sell gaps, meaning pushing through the bottom or pushing up to the bottom, we need to then take note that the market might be trying to push its way through those sell gaps. So they might be rejected instead of holding. So as you can see here on our open, we had this gap here, this gap here. We had a larger time frame gap here. So these are all sell gaps. And then also we have a very bigger one that is up here. This is a sell gap up here. And so all these areas become resistance. So how do we go about it? Well, in the situation on Friday, as we were looking at coming into the market, we have our open, and we're buying above the highway, we're selling below the highway, meaning this opacity zone. We're buying green bars, we're selling white bars. We don't buy doji bars, we don't buy bearish doji bars, we wait for full body bars. We want our oscillators to have confluence or be close to changing colors so that we can take the momentum move. And so with this sell gap here and the market's bouncing in between, we get a double doji and then another smaller doji and then a larger expansion bar, full body bar coming out. Do we take that up into these areas? Well, this would be risky in a sense. Yes, we have a gap up, and so we're in an uptrend. We are in an uptrend, but these sell gaps could hold. And so market came up, kind of bounced on these, and again tried to go higher here, and these sell gaps that the market was trying to go through is trying to hold, and we see a pullback. And then this sell gap that's here, right here, it's this larger sell gap, and then we have these smaller ones that were here. These actually started to become support, but we still have this larger one up here, and you can see how the market moved in that direction. As it's moving up, it bounces off of this gap, this up here. And so again, this is risky, and not to say that you can't make money. I mean, you can make money going any direction in the market, right? But we want our risk to reward and our probability to be in our favor. So the sell gap held, and the market pulled back, tried to fill the gap of the morning, which is this gray area here, but it did not. It bounced back up. We got a higher low, and the market started to make its move up. Well, here we started to get new gaps, and this is what we want to discuss. These new gaps are actually pushing into the bottom of these old sell gaps. And so, and of course, this one over here stopped. So this was, all we had was this upper one. So not that we could, take the chance to take this big move up through these gaps here, these sell gaps. You definitely could. We had a double doji with an expansion bar, and again, this sell area up here, this whole area is a sell area. So seeing this new gap come in at about 5 after, so this not until over here. So maybe you're not catching this move here, but you're able to, at this time we see a gap come in here about 5 after. We see that gap come in. Now we get an expansion bar here coming over the highway. This is where we'd like to go long and try to push up through these sell gaps, and this gives us some opportunity here. But again, the probability is lowered on any of these trades because this sell gap is going to try to be defended by those sellers, and you can see that they keep pushing this back down. And when we get another buy gap here, that's the smaller one up here. So again, it's telling us that we're going to try to push through. So you could try to buy these changes here. And here's a nice one here where everything is actually confluent. And you have distance to the bottom or top of those other sell gaps. So you could see up here. So this area up here, again, these are sell gaps up here. But we have one and a larger one down here of buy gaps. So here, this could be a good opportunity to go long here and at least get our profit up to here to our sell gap. So this will allow you to at least grab these trades instead of just watching the market, which is okay as well, because you don't have to put that undue risk on your accounts. I mean, I know everybody wants to make $1 million yesterday, but quite frankly, consistency is the key to long-term success in trading, and most people are greedy and can't seem to figure out how to get consistent because of emotional trading. So again, we have another buy gap that comes in here, and you can see at this point, and I'm showing these gaps, history gaps. So this gap, actually, this big sell gap that's here, is actually ending. So it gets eaten, meaning it gets rejected, and the new buy gap is what's taking over. So again, this allows you to evaluate, like, hey, maybe we're going to get bigger pushes up. And so as our oscillators go red, we don't want to be buying in here at this point until we see them actually go more confluent. So, but once we get up here where we see, and we have our sell gaps above, but we're still getting buy gaps going, new buy gaps going, and this would be a great place to go long here with our oscillators all up. You would be going long here, and we're looking for a 4-bar profit to an 8-bar profit, depending on how you're looking at taking your trades there. But so again, just doing a short video here today on how to utilize these new buy gaps into older sell gaps, or vice versa. Friday, that's what we were looking at. Will give you some opportunity to trade. And again, it doesn't reduce the probability a dramatic amount, but it basically helps with your probability of the trade actually going if you have the buy gap pushing through the bottom of the older sell gap. All right, hope that helps.